On the 17th of February 2015, Rox Resources released a scoping study on its Fisher East nickel sulphide project. Joining us today is Managing Director Mr. Ian Mulholland, who will talk through the scoping study and some of the development options that were identified from the scoping study. Ian, thanks very much for your time today.
It's a pleasure.
Ian, the scoping study identified two development options at the Fisher East project, a toll treatment option and a processing plant option. Both have positives and negatives. Could you please provide a summary of what both options would look like and which ones you favour at this point in time?
The scoping study confirmed that both development options would yield very robust returns with low technical risk and significant upside. The first option was building a 500,000 tonne processing plant at Fisher East for a capital cost of approximately $85 million. The second option was toll milling at a third-party processing plant in the area, and that would be a capital cost of $21 million. Now, this is a cheaper option for us, but is dependent on us securing a third-party toll milling agreement. Now, we're keeping both options open at the moment. It's possible that we could start with a toll milling agreement and then move to building a processing plant on site, but we'll see how things develop as we progress our studies.
The scoping study was the first in a series of progressively more detailed studies that will need to be completed before you can enter into serious discussions with potential project financiers. Depending on which option you choose, how do you see this financing progressing?
Well, the scoping study is by definition a high-level study with lots of different cost and price assumptions built into it. And really what we're doing with the scoping study is looking at the different options for development so that we can select the best one moving forward. As we start to focus on a specific development option, we'll better define the project and sharpen up our financial assumptions. The next step is for us to commence a pre-feasibility study, and there's also substantial value to be added by defining more resources that will be converted to mineable reserves. The next step after that will be completing a feasibility study, which will be the basis on which we raise finance.
Now, the conceptual mine development plans released in the scoping study for the Camelwood and Musket deposits suggest that they'll both be relatively simple, low cost and low risk operations?
Yes, the conceptual design for both mines is very similar, but we see them as standalone operations because of the 2 kilometre distance between them. Essentially, each mine will start with a box cut with a decline that will then go down to about 100 metres depth to the top of the ore body, and from there we will mine by a very conventional long hole open stoping method using industry standard equipment. From there we either transport the ore as is across to a third party toll milling operation, or we put it through a processing plant on site. If we put it through the processing plant on site, we'll produce a concentrate which will then truck off site for sale.
And presumably you've spoken to third parties about toll treatment options that exist in the area?
Yes, we've had preliminary discussions with third parties who are interested in taking the ore from Fisher East for toll milling, and we've also had some preliminary discussions with parties who might be interested in taking the concentrate for sale. We're still looking at the toll milling and processing on-site development options, so it's too soon to speculate which way we'll go, but needless to say, we'll be trying to get the best commercial deal for Rox.
The Fisher East project still seems to have plenty of exploration upside, and recently you announced the new discovery of the Sabre deposit 6 kilometres south of the Musket and Camelwood deposits. How much of your ground have you explored so far, and what are your expectations for increasing your mineral resources in the short to medium term?
In reality, we've really only scratched the surface at Fisher East. We've got a dominant land position in the Mount Fisher Greenstone Belt with over 650 square kilometres under tenement, and we know from other greenstone belts they're well endowed in nickel and gold mineralisation, and we see the same thing at Mount Fisher. We announced our nickel discovery at Camelwood just over 2 years ago, and since then we've built a JORC compliant resource of 3.6 million tonnes at 2% nickel for a total of 72,000 tonnes of contained nickel. Our discovery cost is less than 5 cents a pound, which is one of the lowest in the industry. We're not only increasing the size of our resource base, but we're also making new nickel discoveries, such as the new Sabre deposit that we've found with a nickel gossan extending over 200 metres in strike that we intersected in recent drilling. We remain confident that we'll be able to convert a lot of our mineral resources to mineable reserves in due course that will justify commencement of mining operations.
In addition to your Fisher East nickel project, Rox also has a substantial investment with Teck Resources at the Tina Reward Zinc Project in the Northern Territory. How is exploration work progressing at this project, and when do you expect to be in a position to update investors?
The project is of substantial value to Rox, and Teck will be commencing exploration soon after the northern cyclone season with a commencement of another drilling program, and we look forward to more good results this year.
Now, Ian, you are earning an additional 19%, up from your current 51%, on the Bonya Copper Project in the Northern Territory by spending a further $1 million on exploration before December 2016. How do you see this project progressing in 2015?
We committed to spend the additional $1 million at Bonya to earn a 70% interest because we believe the copper grades and the tonnes are there. The project lies in a known copper producing area and is right next door to the developing Jervois Copper Project. The Bonya project ticks all the boxes for us, and although it's not our flagship project, it is an important element in our growth strategy.
Now, despite all your recent good news, your share price continues to languish. What do you think it'll take to get investors excited about your story and see your share price start to rise?
Compared to the index, we've managed to outperform most of our peers. And I believe when investor sentiment improves and the value of Rox's projects is recognised, our share price can only get better. As we progress our feasibility studies and continue to grow our resource base through additional drilling, I'm confident the market will begin to recognise the value not only in our Fisher East nickel project, but also in our very large Tina zinc project and the earlier stage but exciting Bonya copper project.
Ian, thanks for your time today.
And thank you.